Welcome to Pro News Weekly. Let's dive into the latest updates on the financial markets. The dollar passes the geopolitical test, stock indices rebound from their slump. Gold aims for $5,000, and Bitcoin has clumsy attempts to grow. The US dollar quickly regained momentum after Donald Trump's speech in Davos. The US president announced that there was some framework for a deal on Greenland, and that he was abandoning his intention to impose additional tariffs on a number of European countries. The markets immediately switched from sell America to taco mode, or Trump always chickens out. Stock indices rose, treasury yields fell, and Euro-USD bears went on the counterattack. The Supreme Court did not support the White House's intention to dismiss Lisa Cook from her position as FOMC governor. The judges recognized that this could undermine the Fed's independence and are considering various options. The most conservative would be to keep the official in office, while the lower courts discuss her mortgage case. The most radical outcome would be a comprehensive ruling outlining the scope of presidential authority to remove members of the central bank. The USD index received support from the SWIFT report, which showed that the share of the greenback in international transactions rose from 46.8% to 50.5% in December, its highest level since 2023. De-dollarization is not an urgent matter against the backdrop of a division between the West and the East. The US currency keeps its dominance and is still in demand. Investors in US equities were comforted by a familiar situation. Donald Trump's tariff threat against European countries was similar to the White House, introducing the most extensive import duties since the 1930s on America's Liberation Day in April. Investors looked indulgently at the collapse of the S&P 500 and prepared to buy the dip. It didn't take long until the US president backed down from his plans in Davos, which sent the broad stock index soaring. From a fundamental point of view, nothing has changed. The upward trend in the S&P 500 remains intact, thanks to the strong US economy and impressive earnings. Markets are waiting for tax refunds as part of the implementation of the Big and Beautiful Tax Cuts and Jobs Act. These could further boost GDP. A leading indicator from the Federal Reserve Bank of Atlanta signals a 5.4% expansion in the fourth quarter. Against this backdrop, there is a high probability that the rotation process will continue. The Russell 2000 reached its seventh record high in 2025 and outperformed the S&P 500 for the 13th consecutive day. Gold and other precious metals have replaced Bitcoin as the most speculative asset. They are rising simply because people are buying them. And this is likely to continue until the gold price reaches the psychologically important level of 5,000. The rally is driven by geopolitics, fiscal problems, the associated debasement trade, lower rates and capital outflows from other markets. When the Fed began tightening monetary policy in 2022, money market fund holdings stood at $5.5 trillion. By the end of 2025, they had increased to $7.7 trillion. As interest rates fall, money will flow into other assets. But to where? Stocks are fundamentally overbought, and Bitcoin has fallen out of favor due to declining volatility. Precious metals, on the other hand, are shining. So, Goldman Sachs' upward revision of its gold forecast for the end of 2026 from $4,900 to $5,400 seems logical. The bank expects a 50 basis point cut in the federal funds rate and points to a 500-ton increase in precious metal-focused ETF holdings since the beginning of 2025. Donald Trump's tariff threats against Europe caused Bitcoin to lose all its gains since the beginning of the year. Bitcoin quotes fell amid a mass flight from risk, and outflows replaced inflows into ETFs. Since the start of the year, specialized exchange-traded funds have attracted a total of about $1.2 billion. Only the return to taco trade and the US president's retreat from his plans allowed cryptocurrency to rebound somewhat. When everyone is selling, there is a nice buying opportunity. The purchase of strategy tokens for $2.13 billion, the largest in a week since July, seems at first glance to be a strategically sound decision. However, Bitcoin's reluctance to grow as quickly as US stock indices amid declining geopolitical risks is causing concern among digital asset enthusiasts. Crypto remains under pressure due to falling volatility and capital outflows to other markets, primarily precious metals. In the last week of January, investors will be waiting for details of the framework agreement on Greenland. The Supreme Court's verdict on tariffs has been postponed indefinitely, and the judge's support for Lisa Cook reduces the risk of the Fed losing its independence. This combination of factors suggests that the US dollar will strengthen. The main event of the 5-day period will be the FOMC meeting. The federal funds rate is expected to remain at 3.75%. The futures market expects it to fall by June. However, if Jerome Powell, who is determined to fight the president's pressure, surprises investors with hawkish rhetoric, forecasts will shift to a more distant date. This will make the US dollar king on Forex. The Fed's prolonged pause and still high interest rates in the United States create ideal conditions for carry traders and contribute to the USD index rally. Other events on the economic calendar include the Bank of Canada meeting, inflation data releases in Germany and Australia, and the publication of German and European GDP statistics. Follow the updates on global markets in Pro News Weekly. Like, share, and subscribe.